Okay, let's go ahead and click on 19.4 Work Together, where we will be doing some disposing of plant assets. So we have a three-stepper here. We've got doing journal entries for any accumulated depreciation, cash receipt journal entries for the sale of the plant asset, and then updating our plant asset records. So for each step, the tabs in our question assets is going to be a little bit different. So I just want to talk about what's in here on the first journal entry. We have our plant asset record for the display case, as well as for our workstation. We have the two transactions we're going to be doing for this step, and then also our chart of accounts. So let's look at our transactions here. It says that we have two assets that we sold, one on January 5th and then also on August 10th. It says that for this step, we'll be journalizing an entry for additional depreciation if needed. We'll be using page 15 of our general journal, and of course our source documents are M's or R's. So let's look at the January 5th one because it says that we received cash for the sale of a display case, plant asset number 105 for $3,000. Remember that because January 5th is actually going to be closer to January 1st than to February 1st, we do not have to journalize the sale of our January 5th one here because there is no additional depreciation. It's going to end at the end of the fiscal year, which is really helpful for us. However, our August 10th one says that we received cash for the sale of a workstation, plant asset number 106 for $2,000, M61, and receipt number 281. So for this one, we are going to have to journalize our additional depreciation for a partial year because we sold that workstation on August 10th. So I'm going to open this up and then scroll down so we can see our general journal. So we do need to do a little bit of figuring here, and the best thing that we can do is go back to our workstation and look at our plant asset record because it's going to show us that our annual depreciation expense is $960 a year. Remember that on this first one, that was also a partial one because we bought that workstation on September 20th. So that's a partial year annual depreciation expense. We want to look at this one, the 960. So remember that when we do this, we're going to take our annual depreciation amount, which is $960, and we're going to divide that by the 12 months that are in a year. When we do that, we get 960 divided by 12, and we get $80. So remember that we are selling this on August 10th. So we have to journalize the transaction for January, February, March, April, May, June, and July. So 7 months total. So we go back and we take our $80, which is our monthly depreciation, and we times that by 7, and we wind up with a total of $560. Hopefully that is making sense, and if not, be sure to give a holler because we want to make sure that you're understanding where these numbers are coming from. So we have to journalize the $560 for that partial year that we did actually use our workstation. So we go down here to our general journal and we plug in August 10th. And just like we would journalize regular depreciation expense, it would be depreciation expense for our office equipment. And if you didn't know that the workstation was office equipment, you can check the workstation tab. It's going to tell you right up here that that's where it's coming from, office equipment. And our document number is M61, debit of 560. And then we go to our credit, which is accumulated depreciation. And then a credit of $560. So first step is always to make sure that you journalize any partial year depreciation expense, because if you don't, when we go ahead and figure out our book value, our accumulated depreciation is going to be off. And so we want to make sure that that is up to date. So that's why we do this depreciation expense first. And now we'll go on and click on step 2, and you guys should have a grade and then next step. And so now we are on the cash receipt journal entries for the sale of our plant assets. Okay, so now in step 2, we have the same transactions, except this time what we'll be doing is recording the actual receipt of the cash for the disposal of that plant asset. So let's look at our first one on January 5th. It says we received cash for sale of display case for plant asset number 105 for $3,000. So what we need to do here is, because we did not have any additional depreciation, what we need to figure out is, do we have a gain or a loss, or did we sell it for exactly book value? The best way to do it is to use this little chart. I had it in the PowerPoint as well, where we put in the actual cash received for our display case, which was $3,000. So we plug that in here. And then we need to figure out our book value. So the cost of our display case originally was $4,040. So we go and plug that in, $4,040. And then we need to figure out our accumulated depreciation. So we scroll down, and our accumulated depreciation at the end of the year was $1,440, which means that our book value was $2,600. And so the difference between the cash we received and our book value is $400. Since that's a positive number, that is gain on a plant asset. So that $400 is the amount we need in order to make our debits equal our credits, and we go ahead over here and journalize our transaction. So we'll come down to our cash receipts, and we'll plug in our date for this transaction, which is January 5th. And we always start with our debits. So the account that's getting debited is actually accumulated depreciation, because remember that has a normal credit balance. So in order to wipe it out, we have to debit it. Our document number here, let's see, is R217. And remember that our total accumulated depreciation is $1,440. And then we go into our credits. So store equipment is going to get wiped out. Remember, this is its original cost of $4,040. Then we have our gain on plant assets, which we just figured out was $400. That's coming from this calculation we just did. And then we have to record the actual amount of cash that we received when we sold this, which was $3,000. So we go over to our cash debit for this transaction and plug in $3,000. So again, you can see we've got a debit, and then our two credits, and those two do equal each other. And so that is what makes us very happy when we do that. Now, our second one that we had was that August 10th, where we received cash for the sale of a workstation, plant asset number 106 for $2,000. So the first thing let's do here, I'm going to go back to my handy dandy little chart. Oops. And we should clear these guys out so that we can figure out whether we had a gain or a loss on our display case. So it had said there that our cash received was $2,000. So we're going to plug in $2,000 here. And then we need to figure out our book value. So we go to our workstation. It said that we purchased it for $4,800. Now, the accumulated depreciation, I don't like that Applia doesn't give this to you as an updated amount and that you have to remember to do that. It is unfortunate. But remember that currently we're in year 24. So our accumulated depreciation was $2,160. But remember that we also had just done an adjusting entry. and that adjusting entry amount was $560 for that partial year because we're selling this workstation on August 10th. So we have to remember to take this accumulated depreciation of $2,160, so 2,160 plus our $560, which is going to give us a total accumulated depreciation. When you do that, we'll select everything of $2,720. When you do that, then you see that your book value is actually $20,080, which means that we have a loss on the sale of this workstation of $80. So we're going to have to record that loss. So let's go back to Applia and scroll down here and put in our August 10th date. So the accumulated depreciation is still going to be debited because we are disposing of that office equipment, that plant asset. Our receipt number is 281. So our accumulated depreciation, remember, is that total amount where we had to add that partial year, 560, so we get a total of 2,720. And then we have to credit our store equipment. I guess we'll put our loss first. I think they'll let you do it, but if it's backwards, but I'm going to do it this way because I'm pretty sure it's alphabetical. So our loss is actually going to be debited because remember, loss on plant assets is actually an expense. So expenses increase with debits, decrease with credits. And then we have our actual office equipment asset that's going to be credited for the $4,800 total cost. And then the amount of cash that we actually received for that was $2,000. And so when we do our debit, and our debit, those should all add up and equal our cash credit of $4,800. Okay, so then go ahead and click on your next step or your grade step for you guys. And we're going to head over to our last section, step 3, to update our plant assets. So here, and see, it's so funny, here they give you the general journal transaction, but didn't on the last one. Silly Applia. And then they also give you your cash receipts journal for this one. So what we need to do for each plant asset record is fill in that second section there. So this is for our display case. Remember that our display case was the one on January 5th. So we did sell this, so we click on our sell amount or sold. We sold it on January 5th, and we sold it for a total of $3,000. So we just fill in our $3,000 amount. And then we did not need to update our accumulated depreciation at all because that one was sold so close to the beginning of the fiscal period. But what I am going to do is open this guy up because we will need to update our accumulated depreciation for our workstation. So again, the workstation was sold. So we click on sold. It was sold on August 10th, fill that in. And then we come over to our disposal amount, which was $2,000. Then we need to come down and update our annual depreciation expense. So we have, if you remember, we had that $560. This one needs to get updated. So we put that in here, 560, which brings our accumulated depreciation up to 2,720 for an ending book value of 2080. So like I said, kind of frustrating that they didn't actually have this on our second step because it would have been really helpful. But here we have completed all 3 of our steps, from figuring out additional depreciation expense, journalizing the receipt of cash for the disposal of an asset, and then updating our plant asset records and any associated accumulated depreciation. So you can head over and do your 19.4 on your own and application problems.